Hey, if you're watching this video, you've already seen what it looks like to do step one and also step two. So step one is where you plan your trades. That's what every serious trader will always do, and you're not going to deviate from the plan. So you're going to plan your trades every week and every day, um, depending on what type of trader you are. If you're swing trading, that's going to be a weekly thing, and you might check on the charts every 2 or 3 days or so. And if you are intraday trading, that's going to be an everyday thing. And then step number two, you execute on the trades as best as possible. And what that looks like is, are you following your plan? Did you wait for price to reach the levels that you already marked up? And the reason why step number one is so powerful and crucial is because number two won't allow you to just jump into, any and everything you see. You're actually going to now wait for your conditions to line up, and then you will execute on your trades. So we're at step number three, where we journal this whole process, and we are able to gather information to see what we need to change on our system to have better results. Because days and weeks and months and years will pass by, and I'm speaking from experience. If you don't write this stuff down in a physical journal or a digital journal, you won't have the information the next time that setup comes up to just take the trade with confidence. So what I'm going to do is just walk you through. So right now, this is Euro USD. Currently, it's January the 2nd, right? So this is the current situation for Euro USD. And what I've done is I've marked up where price was, right? We can see where price was not too long ago. We can see where price recently just hit, and we can see where we currently are. But throughout that whole process, before we got to here, I'm not even going to even have to do a bar replay at all. I'm just going to keep it simple so you can see the whole situation. And then what I'm going to do is I'm going to use this journal tracker to share this example with you. And I'll leave a link for you to have a copy of something like this. I use another one. This is just for example purposes. And I also have a physical journal. And you have a physical journal as well if you've downloaded the ebook that is on this page. So without further ado, what does it look like to journal this process? So here we are looking at a key level. And what do we mean by key level? You're going to see us do very repetitive things throughout this entire journey. A key level is an area of supply or demand, or a low or a high that price is breaching. So I'm going to just type in key demand level, right? Pretty much an order block. And this is a key supply level. And you'll see these terminologies a lot inside of this system in different trainings. So I'm not going to go explain what a supply versus a demand level is. I want to focus on just looking at this process. So this is a weekly level, all right? And price came into here last week in the end of December. And then when it did, we're either going to see something like this, right? You're either going to see price go through the supply level and turn it around into demand and keep going higher, or you're going to see price go into your key level and reject from it, just like we did here. You're either going to see when this was going down, you were either going to see price go through that demand level, turn it into supply and keep going, or you were going to see price get into the demand level, turn around and go higher. All right. So that's why we trade from key level to key level, because look at all this space in between Euro USD, right? So depending on what kind of key levels you're looking at, you could be trading specifically, you know, from tight supply and demand levels, these wicks that are happening here on the weekly chart. On the lower time frame, they actually are order block levels as well. But that's for another day. What I want to do is just jump in to the 4-hour chart and show you what happened along the way. So the price was going up, all right, and coming back and going up and going back and going higher. And as it was doing it, again, it was trading into key demand levels. And then even recently, we had a key demand level here that, well, we're in it right now. So either price is going to go through it, pull back and keep going higher. It'll accumulate in there. Or you would see price reject from that level and go higher. All right. So let me just remove this real quick. Let's just focus on the key level that we're talking about right now. And again, very, very simple. So price came inside of this level and it created an order block, a demand level. It went like this, right? Created a leg, accumulated in that gray candle, and then went higher. And then immediately broke this down. I know you're not going to be able to see it yet, but this this setup, this pattern, you're going to learn this, and it's going to change the game for you if you don't already know it. It's a turtle soup. So price was going up. It went into our key level. And then again, either we were going to go up, reject from that order block and go higher, or we were going to go through it, come back to mitigate, and then go lower. Now, we got scenario number 2, all right? And when it did that, it created a setup that me as a trader, you as a trader, you'd be salivating over this to take, because it happened in our window of opportunity. This happened at like 8, 9 o'clock in the morning. But more importantly, it gave a clear setup. So hypothetically, let's say I didn't take this trade because it was Christmas time, right? It's crazy what they do during holidays. But let's say you want to take this trade, the setup would look like this, and I'd be targeting at least a 1 to 2 risk to reward, or possibly this demand level down here. So let's be real. I'd probably be targeting that demand level down here for a 1 to 3 risk to reward, and then close the trade, and then reassess them and look at something else. It actually went down to this key level, but let's just focus on here. So how I would frame this for a journaling process is, I literally would take a picture of this, open it in a new tab, and you're going to be able to do the same thing, right? So we're going to take a picture of this. We're going to copy it. We're going to go to our journal, and we're going to say, all right, so this is Euro USD, right? We'd be risking 0.25% on that trade. We're going to sell it, all right? And I'm going to do December 23rd at 9 a.m. or 8:30, around that, whatever exact time it was. I'm not going to take too long on this video for you. And the entry was 1.11074. So I do 1.11074, and the stop loss is 1.11327. 1.11327, right? And I'm looking at it from a weekly H4 setup. Very simple. So we do W, H4, and then I paste, I'm going to embed the link here for my trade idea. So I'm going to link, and we're going to say the DXY reached a key level and turned bullish. Euro USD reached a weekly key level and turned bearish, giving me a setup H4 turtle. So that's specifically why I'd be entering that trade, right? So there's no, well, exit average. We're gonna say 110, 100, and I could even do pips. So how many pips was this? It's about 80, 90 pips. So I can come here and say 90 pips. And my exit logic is take profit hit. Rules followed, yes. And money management, yes. And mind you, we're just doing examples on this. So none of this data is accurate. Don't mind that. Money management. Okay, let's focus on this example. Yes. And the setup was A+, and I set a pending order to be hit and allowed software to manage the trade. And I risked half. 0.25 is half of the information I've been using here. And there's no net P&L because this is, again, if I were to throw something in here, I'd be like, whatever, $2,500 or something like that, right? But again, the point is, I'm tracking this information in a way where, I'm going to give you an example, this DXY, right? In a way where when I look back at it, right? When you're looking back at your setups, you can see what happened, and you can see whether or not it was a good trade to learn from, to grow from, and to replicate, or if you should never do that again. For instance, let's go on to daily, right? And talk about, let's say, what is that? 106, 106, right? The projection was as price was coming into this particular key level here, literally at 106 something, we wanted to sell anything that came back to mitigate inside of those levels. So 105.61, let's say 105.61 was right here, 105.61, right? And the projection was for price to go from 105.61 to 104.500 and possibly lower. And what we got was, that was when the dollar recently just dropped from this level all the way down to 101, 100, 101, 100, 101, 100.500, and started to turn around. So it went from one weekly key level to another weekly key level. All right. And that's the power of tracking every single setup that you take, because the first step is to plan the trades. Number two is to execute them. And then number three is to review the information and see what happened, so that you can learn from the scenarios and replicate the things that created profitable systems for you and eliminate the ones that are not creating profits for you, or optimize them as best as possible. All right. So I hope that this created a lot of insight for you, because you can clearly see that it just takes a little bit of willpower and effort. A lot of people just you want to wing it. Anything you see, you want to trade, but that's not how this works. And in order to create millions, tens of millions, hundreds of millions of dollars in these markets, even $10,000 consistently, this is the work. Step one, plan your trades. Step two, take the trades. And then step three, review the information so that you can always do step 1 and 2 properly.